Sometimes Forex trading is a wild and woolly place to be. That's why Hugh's here, to pose your questions to Walter, the naked Forex guy. Hugh's got questions, and Walter's got the answers. Here at the Truth About FX podcast.
Hey, Walter, this is an interesting question. I saw somebody probably asked you, I saw this video on YouTube on risk management, and it said something like, how to turn $300 into $1 million in a year. Where's this trading strategy, and how would I implement this?
Yeah, it's a great question. This did come from a student in the forum, and he basically was trying to figure out the math made sense to him. So he's trying to figure out which strategy should I use to do what this guy is talking about in this video. And the answer is probably none. Because basically what this guy was doing, he's risking like a quarter of your account to kind of leverage into a big run, and that's for most traders the drawdown that's inevitable. Is going to mean that you're going to start questioning yourself, and at some stage you probably are going to quit and get to that uncle point where you just don't want to do it anymore. So really, when you see these sorts of money management magic tricks, it's usually not a good idea to try and fit your trading style into that. There is one exception, and that would be if you have a whole host of trading systems. And when I say a host, I mean like dozens that you are trading. And if each of those systems trades often enough and you have low enough risk, then essentially what you're doing is you're speeding up the calendar because you're taking so many trades. And this is really the attraction of scalping for a lot of traders. The reason why they're so attracted to scalping is because they understand this, that they get paid per trade, and so I might as well take more trades. And that's sort of the distraction that scalping provides. There's so many other problems with scalping, including, if you want to Google this, look up your nucleus accumbens and see what that is. I'll link it up below this podcast, but look up that. That's the area of your brain that's activated when you do drugs, when you get addicted to things like gambling, and when you trade lower time frames, like start doing scalping. So those things, although it's possible to do that if you have a lot of trades going through your platform, it's probably in most cases a really bad idea because these guys aren't looking at risking 1 or 2 or 0.5%. Instead, they're looking at risking 20 to 30% per trade. And although it's true, the math does work out, and it's absolutely a true mathematical fact. The psychological aspect is the most likely deterrent for you if you were to implement it in real time. So essentially, I would say none.
Yeah, great answer. Well, thanks for the tip.
See you next time, Hugh.
See ya.